for those of you who are business people, I'm going to start by giving you 20 tax tips. So just get them, list them out. If you want to know more about them, you can also ask me. Some of them are already on the channel. So number one tax tip that I tell everybody: bookkeeping. Bookkeeping is king. Whatever you do, make sure you keep your records. Make sure your records are there. They are working for you. They will work for you. If you don't keep records, 90%, I do a lot of tax resolution, and 90% of the problems I see with my clients is because they did not have proper records. So if you want to think about anything about tax optimization, think about bookkeeping. That's number one. Number two, for those of you who are already in business and you're making money, if you think you're making a lot of money this year and you want to avoid taxes, remember, after the 31st of December, there's very few things you can do to optimize your tax position. So what I will tell you is that buy property, buy equipment for your business. Buying equipment doesn't mean you have to spend cash. Take equipment on credit. Those equipment are going to be deductible depending on the type of equipment. That's number two. You can buy equipment that you need for your business. You can buy some of your supplies that you need for your business. Buy them before the end of the year. You can buy them on credit. They are still going to be deductible for your business. Number three, you can buy a vehicle. What vehicles? There are two types of vehicles. When you buy a normal vehicle that's less than 6,000 pounds, you get up to $19,000 deduction that you can get immediately. And if you buy anything that's bigger than that for business purposes, you can write it off immediately. So buying a vehicle is one of the things that you want to do, you want to think about. Number four, you want to use your HSA. If you don't have an HSA, health savings account, go and create one. Once you create one, you can set it up, put money inside. That money is tax deductible because it's money that you can use for your medical expenses. Put them in an HSA if you are making much profit. There's a limit to what you can put, whether you are you're putting as a family plan or as an individual plan. The key thing is that you must meet certain requirements. It must be a high deductible plan that you have. Number four, you have to make sure that your employer is including your health insurance on your W-2s. That is going to also help reduce because that is deductible as well. Roth conversions, for those of you who already have Roth IRAs, if you have a Roth IRA, not a Roth IRA, if you have a traditional IRA, this is the time you can convert it. Remember, with conversions, there's always something you can do. You can convert it into a Roth, but what this means is that there is a strategic intent behind that, because if you're converting into a Roth, you have got to pay taxes now, and then that money will go tax-free. That is an area that you want to talk to us about, and we can help you as well. Another one is shifting incomes and expenses. This is a very big one, and I tell my clients all the time because anybody can do that. Anybody can really do that. What does that mean? That means that if you are getting towards the end of the year and you're making significant profits, and your profit, you're looking at your income statement and you're saying, wow, I'm making a lot of money this year and I'm going to be paying a lot of taxes. What you can do in order to optimize that tax position, if your intent is to reduce your tax position, then one of the things you can do, you can also play with what? You can shift what they call it, shift incomes and expenses. So instead of basically making collections now, you can defer your collections. If somebody was going to pay you, you can hold that collection, and instead of taking those collections now, because most of my clients are all cash basis taxpayers, and if you are a cash basis taxpayer, as long as you collect the money, it's going to be taxable in 2022. But if you defer the collections to next year, let's say someone wanted to pay you $90,000 or $50,000 or $100,000, if you collect it before year end, you are going to pay taxes on that money. But if you defer that money and you receive it on the 1st of January, then you have just pushed away that collection and it's going to be taxable in the following year. And the same thing, you can do that as well with your expenses. Expenses means you go and buy more items that you need. We just talked about that on point number 3. You can go and buy more, so you're shifting your incomes and expenses. That's number 7. Number 8, charitable deductions. What are charitable deductions? These are things that you give to a charity. If you are a Schedule A tax filer, which means that your filing is you are going to be using how do you call it? You are going to be on an itemized deduction. Then charitable deductions is a key one. It can help you reduce what? Reduce your tax bill. So you can do a lot of things. You can even put charitable giving on your credit card. Put it on a credit card and you still get the tax deductions immediately. Another one, which is number 9, is set up retroactive S Corp election. What does that mean? That simply means that for those of you who have LLCs, you can go and elect to be filing as an S Corp. If you elect filing as an S Corp, there are other things you need to do in terms of you have to look at your paying yourself, because if you convert to an S Corp, you have to pay yourself a reasonable salary, and you can basically gain a lot in terms of self-employment taxes. Again, this is an area that you can help. You need the help of an expert to make sure that you do it correctly. Number 10, you can establish your payroll level. When you determine an S Corp, you have to determine your payroll level, and that is something that is very strategic, because there's something that you call reasonable salary, reasonable level of salary. Because when you convert into an S Corp, what you're basically telling the IRS that I'm no longer a company, now I'm a corporation, and as a corporation, you become an employee for that corporation. As an employee for that corporation, you are required to pay yourself as an employee of that corporation a reasonable salary. What is a reasonable salary? We can talk about it. We can discuss, and by doing that, you're going to save yourself a good chunk of the 15.3% self-employment tax that you're required to pay.